A big welcome to our live audience for the Digital Health Investor Talk show. I'm your host, Steve Wardell. I'm the managing partner of Wardell Advisors, a digital health advisory firm, and the author of The Future of Digital Health. Wardell Advisors is helping digital health companies address issues around growth, fundraising, trade sales, and strategic alternatives, giving you more options in today's challenging environment. You can follow me at x.com/Stephen Wardell. Our show today is on the topic, where are digital health and AI creating value in healthcare today? Our guest today is Barbara Kohler. She's a partner at Fletcher Spaght, the growth strategy consulting firm focused on healthcare. Barbara's clients include health systems, academic medical centers, innovative startups, large strategics, and all aspects of digital health. You can follow Barbara on LinkedIn. Fletcher Spaght publishes reports on their Insights and News page on the website and on the Fletcher Spaght LinkedIn page. The digital health market intelligence reports are easy to locate on the Fletcher Spaght website. This show is being recorded and will be included in my podcast series called The Digital Health Investor Talk Show. Subscribe to our podcast on Apple and Spotify and leave us a review. We always love getting 5-star reviews. We have new podcast links for the show, so make sure that you see recent episodes uploaded when you subscribe to the show's page, or you could be on the old page. This is not investment advice. We are not investment advisors. Here's the format of today's show. It's 90 minutes long, and Barbara and I will spend the first part discussing the news and the macro picture and some other topics, and then we'll focus on our special topic of the day. And we'll be taking your questions throughout the show in the LinkedIn text chat. So, Barbara, welcome to the show.
Thank you. Thanks for having me, Steve.
And can you please introduce yourself with an emphasis on topics related to today's show?
Happy to do so. My name is Kohler. I'm a partner and CFO at FSI. We are a strategy consulting firm focused on healthcare and growth strategy. We provide kind of that analytic rigor that helps company know how to capitally efficiently grow, right? How to grow in tough times as well. So that's what FSI does. And we have a very unique view of that ecosystem. I like to say we see bench to bedside from every perspective. So we work for research and startups, we work for companies fundraising and investment firms that are doing landscape and diligence, and also strategics that are growing both organically and to acquire. So excited for our conversation today. My journey in healthcare started 3 decades ago, doubly by training. I have programmed a neural net, not well, but enough to understand AI a little bit. After my Harvard MBA, I worked at the Boston Consulting Group, mostly for kind of big healthcare companies, big healthcare health systems. And after consulting, worked for Athena Health, which is an EMR company right before IPO, about 5 years after IPO. Huge growth there. That was a very exciting time, kind of 30% a quarter growth. And then after Athena, I joined a real startup, fourth person into an AI diagnostic in dermatology. That was successfully acquired in 2020. And after that, back to consulting. So I've seen kind of what works, what doesn't work from both my own perspective and also those of my clients. I'm looking forward to our discussion today.
And that's a great background for the topics that our audience cares about. Wonderful. So our first section of the show is macro news, where we talk about things like interest rates or job reports and stock market index levels, that sort of thing. And today is a wild day. So for our audience who's just tuning in, maybe hasn't been watching the news today, markets are up big time. The NASDAQ was up 11% the last I saw. And that is on Trump making an announcement that he is temporarily reversing course on tariffs. So he has reversed course from that chart that we saw with the many different high levels of tariffs to a simple 10% tariff across the board for all countries except China, which has a 125% tariff rate for China. So I don't know if we're going to wind up at 125% for China, but he clearly wants to sort of retaliate on China's moves and also perhaps address them first. So I think very unexpected. He had been denying until just the other day that there was a possibility of a 90-day pause on these, and then we still don't know what will happen after the 90-day pause. But Barbara, any initial reactions to this?
Yeah, I mean, I think the tariffs are, we saw the downward spiral in the market, right? We saw like the loss of, I guess in 48 hours, $5.4 trillion. So never easy to execute on tariffs, hurts companies, hurts health systems. So The American Hospital Association had lobbied to carve out medical supplies from those tariffs, and that was not successful. Pharmaceuticals were carved out of the first batch, but likely won't be carved out of the next batch that happens after 90 days. So tariffs has really just added to the instability in this market, which has already been, IPO window's been pretty tight, M&A has been slow. So unfortunately, that instability doesn't help.
Yeah, and so why don't we dwell for a moment on what tariffs would mean for healthcare in general? And so now healthcare for 50 years was viewed as a sector that was counter-cyclical. So healthcare does well during recessions, relatively well. And also the US healthcare system is widely regarded as relatively shielded because you have to sort of be in the US. It's like haircuts. You sort of have to be in the US to provide healthcare services in the US. So that would be shielded from tariffs. Nevertheless, though, the whole supply chain of healthcare is highly globalized today. And so that means that day one, disposables and other machines that are used in healthcare would start to be affected by these tariff prices. And then I think that this kind of stability, we're widely viewed as being on the cusp of a recession. So there was supposed to be a recession under Biden, but we were spending on 2 wars. And you usually don't get to skip a recession. You usually have to have a recession, even if it lasts only 1 year. You usually don't get to skip. And so people were wondering, well, did we skip this recession because we were spending on 2 wars, or will it fall in Trump's term? And so the instability and the potential extra tax of this tariff has the potential to throw us into a recession, which in turn you could see unemployment. So there's general unemployment of a recession. There's also specific unemployment of people who sell products that don't make sense anymore in a high tariff environment. For example, there's dislocation when a product costs too much imported, but there's not enough supply that's domestic. Those workers, maybe they can get a next job at a place that makes the product in America, but there's still dislocation in between. Maybe they have to move to California to get that job or something. And then there's inflation. This will likely be inflationary. Now, of all the countries in the world, America is the large country that is least exposed to foreign trade. Much of our GDP is internal. Nevertheless, this will still be somewhat inflationary. And I was traveling in New York recently, and I heard that of course, you have a consolidator and you have a target, and the consolidator might have a big pile of cash on its books. And if that's the case, it only has to persuade its own board to make an acquisition. But if it doesn't have a big pile of cash, it needs to get financing for the acquisition. And that this just uncertainty makes it harder to get financing for. So it's very just easy for the people who are dispersing the financing to wait, to say, I'll wait. So those were some of and then I'll just jump in so there's also, this is not related to tariffs, but there's also the uncertainty of RFK's policy. And here I'll call it a kind of a dislocation where he has different priorities. And so the way that a lot of federal spending, a lot of research works is that you spend for 5 or 10 years on basic research, and finally there's topics that are ready for commercialization. But RFK may have different preferences, so he shifts that funding to other areas of basic research. But you can't commercialize that immediately, and so there's professionals who would like for this sort of chain of innovation to continue at the same pace as continued in the past. But all of a sudden, the old sources dry up and the new sources aren't ready yet. There's a vineyard problem in there. And then I've also heard that there's cuts at the FDA, and that this means that people who have matters before the FDA could find delays, basically. I'm trying to interpret the news of the last week or two, especially tariffs, for our audience. Any reaction, Barbara, or other things you want to add to this?
Yeah, absolutely. So tariffs, I think, you've kind of hit the major point, because it's going to increase costs, and if we can't actually provide the supply here in the States, it's going to potentially lead to shortfalls. So that's a big issue. But there have been a lot of other things happening, right? So the FDA moves with the NIH IDC rate cut. That's also a big deal. So you've got kind of a pause in research, and I've heard several views on this. Research takes a lot of time, and I heard you say, you may not be ready for commercialization immediately. But in fact, when you pause research that way, you've really lost a lot of momentum. So it's not that you can just start again. And the reason that the same people tend to get grants one after another is that they're in small doses so that folks can show deliverables. So that whole piece is a bit of an uproar, and I'm not sure how that gets resolved. But when you think about instability in a market, that's something you have to count in. Innovation happens, and then people invest, and it's hard to do so when, in fact, that innovation was paused. So those problems could be longer term. The whole idea of having to get funding to raise capital isn't necessarily a huge problem. Folks were kind of JP Morgan hoping for at the JP Morgan conference in January, there was cautious optimism that maybe interest rates were going to fall. And so maybe that would even make that gathering of funding more palatable. That hasn't happened. So that also has something to do with kind of the instability. And then some instability on things like the HHS, layoffs. CMS has had some interesting statements on GLP-1s, which is fine, but they haven't made a lot of statements on a number of other topics that people are waiting for guidance on. So I do feel like more economic stability would be a really good thing for the audience on this phone for the innovation economy. And we can be hopeful that will come over time.
Yeah. And so another way for me to explain this or to frame this for the innovation economy, I think, is that that there's big enterprises, the big institutions of healthcare, and that is like hospitals and payers and pharma and others. And they may sense instability, and that may cause them spend 10% less in a given year, or to delay a decision to spend money for 3 months or 6 months. But the innovation economy is often vendors that sell into the big companies. So a software vendor or a SaaS vendor that's selling in. And so those cuts to that innovator may be 50% of their expected new revenue that's coming in, or a delay of 6 months may really wreck a plan. So these changes that are relatively small to one of the big enterprises tend to become much bigger when you're a vendor selling into those enterprises.
Absolutely.
So then moving on to business and trade journal news. And for our audience, if you want to ask any questions by putting a story into the chat, that would be great. One thing I'm hearing is I like to look at fundraisers, especially in trade journal news, but I'm hearing of a Trump pause in early stage fundraising. And this is just because investors they were used to record high stock market levels. They were anticipating short-term rates coming down, and they had certain theses that they like investing in today with a possible payout, 5 to 8 years down the road. And so they're sort of pausing to understand what's going on and also get a closer beat on valuation. They don't want to do a deal today and discover that the same deal would be done for 30% less 2 weeks later or something. So I'm hearing of a kind of a Trump pause from just the instability that's being caused here. And an example of that is that there was a much heralded filing of an S1 by Hinge, and people scrutinized the S1, and there's approximately 100 digital health unicorns that have grown up since meaningful use in 2000. Few of them have gone public, and many would like to go public. And with stock markets formerly at record highs, people thought that we'd see some attempts at IPOs, and people scrutinized the Hinge S1, and they kind of liked the growth rate, and they liked the fact that it was turning profitable.
Mm-hmm.
And now we saw one IPO, which was that I think it's called CoreWeave, which was in big tech and which is a GPU outsourced server company. And that did not perform especially well. It was not very notable. And so now with the volatility, we're not hearing anything more about the Hinge S1, and people are suspecting that it would be wise for that to be pulled for the indefinite future. So anyway, Barbara, any thoughts on that news?
Yeah. So the interesting thing about Hinge is, smaller companies, you have the choice of, right, you're either going for revenue growth or you're going for profitability. And the interesting news about Hinge is that they probably will be okay without an IPO. They probably will do fine. They probably will wait for an environment that is a little bit more, that's just a better environment to go ahead and launch. There have been others that have filed S1 either confidentially or not, but Omada's one that did file an S1 confidentially, and they also have an IPO. The IPO window has been pretty tight. I think we've had 3 since 2022 within the digital health realm. One thing I like to look at when I think about this is I like to look at where multiple payers invest. You were talking about those key stakeholders. And when you've got a place where multiple payers are investing, you know there's a clear need, and potentially reimbursement might come quickly after that. So Omada that I just mentioned, they are one of those companies. It's a virtual care company for chronic disease. We thought they would IPO. CareBridge was acquired last year. They were one of those multiple payer investment companies. Abridge, which just raised 250, also one of the multiple payer investments. So it's an interesting thing. I'm not going to be surprised if these IPOs pause because we have had so few, and I think you need some more stability. I do think fundraising is happening. I mean, we've seen just this quarter, Innovaccer raised, I think it was 275 million, Unified Patient Data Cloud. Truveta raised 320, Hippocratic raised 141, Prenovo, the one that does the MRI full body scans, they raised 120 million. So the raising seems to still be happening, but I do not think the IPO window will open until things calm down on the macroeconomic level.
Very interesting, thanks. And so, some standout IPOs standout fundraisers of the last couple weeks. So Thatch, an employer-focused health benefits company, raised 40 million in Series B, bringing total funds raised to 84 million. Index Ventures and General Catalyst led the round. Their CEO is Chris Ellis, and he said they're using the funds to scale their offering and expand their workforce. So to me, this was great news because this is a classic digital health company funded by classic U.S. venture backers. So many times I've seen a company that didn't quite fit the profile of a classic digital health company. It was backed by some corporate venture fund or some overseas investor or something, and that indicated how slow investment rounds were in the seed A, B field in the U.S. But so I'm glad to see this in the employer space, and I'd note this is a Series B round, so that might indicate that venture investors are putting their money to work a little later in the company stage where it's less risky. And then Solus, a healthcare navigation platform, announced a $60 million Series B. Menlo Ventures, Inspired Capital, and Craft Ventures and Signal Fire were the investors. And Solus matches patients with advocates, and the advocates then help them navigate care. Their CEO, Jeremy Gurwitz, and the company will use the money to grow the number of advocates and accelerate growth. Also, another company, these are mainstream investors and a Series B. So I didn't see that many rounds announced in the last couple of weeks, but these two were sort of mainstream sector digital health companies backed by mainstream investors. So that's a good sign. Barbara, any thoughts on these or any other fundraiser of the last week or two that you want to call out?
Yeah, both of them. I'll just go back to the Innovaccer one as well, the one that raised about 375, the patient data one. What's interesting about that is the folks who were involved. So it was Kaiser, Microsoft, Banner Health. Like, it was an interesting collaboration of folks. And the only other one I probably want to revisit as well is the Hippocratic AI, because that's the large language model that has the AI for voice and chatbots. And they raised 141 million. So those are both also really good signs. So I think there is still some investment happening. And I suspect that what we're going to see is investment, but consolidation. I think the prices are good. We're going to talk about pre-money valuations and things like that. But I think what we're going to see as a trend is a bit of consolidation coming up.
Yeah, and along those lines, so I was an analyst on Wall Street for several years in the recent past, and we saw in 2009, we saw two things happen. We saw the meaningful use subsidy, $40 billion dropped on hospitals to buy EMRs. And then we also saw the Fed respond to the global financial crisis by adopting a zero interest rate policy. And in the wake of that, we had unprecedented massive entry into digital health. We had entry of everything. We had entry of entrepreneurs, entry of VCs, entry of LPs, entry of new companies, entry of new products, entry of just the most incredible entry into the sector, leading to thousands of digital health companies in the US and many abroad as well. And I remember as an analyst saying, well, we've had a lot of entry of young companies into the sector, and in the near future, I would expect to see a shakeout and consolidation. So I was saying this in 2015, 2016, 2017, and we didn't see the shakeout and consolidation. And we didn't see the shakeout because the marginally poor companies that didn't have good fundamentals didn't have to give up. They could always raise another round in a zero interest rate environment where investors prized growth and they prized being in technology and healthcare in America. Investors all over the world wanted to move their money to have greater allocation to that. And then also those companies that were extraordinary, who had great fundamentals and were growing fast, they would have been snatched up and bought by the consolidators, but they had astonishingly high valuations, so consolidators were leery to buy them. And they also could raise unlimited funds. And so the management team would say, well, do we sell out today, or do we raise a giant round at a high valuation and swing for the fences and try to be the next consolidator ourselves? And so that shakeout and consolidation didn't happen then. And what people are saying now is that market conditions are such that a lot of companies have been trying to extend their runway, having trouble raising money and want to extend their runway, but that we're finally going to have that shakeout and consolidation. And it's probably going to be a buyer's market, and the shakeout part will be very painful, and it will have a lot of companies that might have been shaken out in 2018 or 2020 or 2022, but they managed to raise money, and now they're not able to raise their next round. So that's certainly, we're seeing that sort of thing.
Yeah.
So the next phase is reports that have come out. So for our audience, if there's any reports that you have seen that you want us to comment on, one that I saw that was really interesting was the Peterson Center on Healthcare issued a report where they found that the rapid adoption of ambient scribe technology is, so they're finding first that it's being adopted rapidly, and second, that it's helping to reduce clinician burnout. So that's really interesting because in digital health and in selling into the provider organization, almost nothing is ever adopted rapidly. It's very rare to have something adopted rapidly. So I got into digital health in 2006, and there was a furious debate over could we get doctors to answer patients' emails at that time. And now it's 2025, and we're still having this debate. And some doctors don't like to, and some, in value-based care, they often do. And they have special HIPAA compliant messaging systems or whatever, but many doctors don't like answering email today. And so to have a new category, and this category is sometimes powered by modern large language model AI. So it's a new category, that's an AI category, achieve rapid adoption. That's a big deal in healthcare. And then reducing clinician burnout, that's also a big deal. That's one of the pain points that gets the attention of hospital CIOs and hospital CEOs and even practice managers. And then I'll point out to our audience that scribing is interesting because it sounds like it's a minor part of healthcare, scribing, and scribing is actually, I think, I've heard that scribing is deemed as not clinical. So scribing falls more in the billing area, but scribing is not making decisions, not making recommendations or whatever. But scribing is the gateway to clinical notes. And because it's the gateway to clinical notes, it's also the gateway to billing and coding. And together that's a really big part of healthcare. And so interestingly, you could have companies that enter this market in billing and coding, but then companies that entered as Gen AI ambient scribe companies with clinical notes might have an advantage. They might be able to more easily sell billing and coding solutions that build on their own software. So that's an interesting possible shakeup there. And I've also noticed that I've seen a number of products where the voice interaction is just outstanding. There's ChatGPT famously has a voice mode for iPhone, and Grok has a voice mode for iPhone, and they call these native voice modes. So they're not in the computer's brain. They are not translating it to text and then reconverting the response from text back to voice. They're pure voice. And there's one out there that was embraced by Andreessen Horowitz that's called Sesame, which was pretty remarkable in terms of you feel you're talking to a human and they're responding intelligently and quickly with low latency. So if you're not familiar, if you think that we're dealing in the world of naturally dragon speaking still, the new solutions out there are really extraordinary. So Barbara, any thoughts on the Peterson Center report?
I haven't seen the report myself, but I think they're 100% right that adoption in clinical documentation, the ambient AI documentation, has been outstanding. We're going to talk a little bit more about that in a bit, because I also feel like that's a market that's kind of past the inflection point. If you're entering that market, you're really going to have something quite unique. The clinical notes section is critical to health outcomes, critical. It's not an area that you can typically, it's not a structured data part of the EMR. So there's a lot of AI that sits on top of that to understand how to best leverage that data. But it's also what takes a lot of time. So this is a lot of what happens with physicians and providers on weekends, on Sundays. Like it's a big pain point. So exciting that there has been some relief on that part.
Yeah, and I'll just mention that there's actually a role in healthcare. So everyone knows of and is probably slightly confused by the fact that there's their physician and there's specialty physicians, and then there seems to be about 11 different flavors of nurse, including traveling nurse.
Nurse.
I've been in healthcare for a long time. I don't know what a traveling nurse is, and all these other nurses and credentials and other physician's assistants, other orderlies. What are these people? There's actually someone called a scribe in a healthcare context. And the scribe is someone who comes into the exam room with you, often with an older doctor who does not like EMR technology and writes it down. More recently, I've seen live human scribes on iPad voice connections, so that that they will establish a voice link through an iPad with a human scribe somewhere. It doesn't have to be walking around with the physician. And then now there's this ambient scribe, which is all software, and they don't just transcribe, they also know what to look for, and they turn free text into structured text, and they can even prompt doctors. So if the system wants to know whether the doctor spent about 15 minutes or about 30 minutes with a patient, the system can prompt the doctor to answer that question if the doctor didn't think to include it, or that sort of thing. So very interesting. And then Rock Health came out with their fundraising report. We always like looking at this, and it said for first quarter there was $3 billion in funding across 122 deals. They noted that deal size grew significantly from the fourth quarter. So the average deal size in the first quarter was 24 million. The average deal size in the fourth quarter of last year was 15. And this reflects a shift to later stage funding. So that's something that entrepreneurs and innovators are very concerned about, which is that VCs have dry powder, or people are now calling it damp powder, to put to work on startups. And if they feel uncomfortable with the risk at the early stage, then they can just go later stage. And that's bad news for the early stage innovators. And so we may be seeing some of that here. And and the number of deals was down to 122 compared to 133 for the same quarter last year. And Rock Health called this a quarter of continuity. First quarter was a quarter of continuity. I know that a lot of innovators didn't like the fourth quarter of last year and haven't liked the environment the last couple of years, and we're hoping for something better in the first quarter, but it turns out the first quarter has been kind of more of the same. So Barbara, any thoughts on any report, any thoughts on the Rock Health report or any other reports you want to talk about?
Yeah, the Rock Health report we do look at regularly, and we're going to dive into kind of segment by segment where venture capital is investing, and the fact that if you can't get to exit, it's harder to get that money flow back to early stage. Certainly agree with that. We put out Fletcher Spaght on fletcherspaight.com, so follow it either through my name, because Fletcher Spaght is a little hard to spell. On the Insights and News page, we put out a digital health market intelligence report that a bunch of PE firms use for their investment committee meetings, et cetera. There's good data in there around who's investing, what companies are getting investment, what the trends are. So feel free to download that and use it for your own purposes to grow your company. Like it's pretty helpful. We also put out a robotics report and a bunch of other things. So feel free to grab those off the website, and hope they're very helpful.
So, and just for time reasons, I'm going to skip a little forward in our show plan, and then so this is just a fun part of the show where we talk about what is a technology that has improved your life. And so I'm going to throw out here a couple of things. One is just, I'll call it the category of voice. So I just mentioned this before, but I think that we're going to see increasingly, it used to be just early adopters and nerds who would talk to their phone in public. But I think we're going to increasingly see more and more people doing that. There'll be more devices in our lives. We're going to talk to them, and this is going to be socially awkward in some ways, because you might see someone revealed embarrassing information by talking to their phone in public that they otherwise would have seen on a search results page or something like that. So, and then related to this, I've also been hearing that just in the last couple of weeks that seniors really love their Amazon Echo and their Google Nest. So this is a case where people that we don't usually associate with being technology early adopters have taken this technology of Amazon Echo and Google Nest and like it. And I consider it to be a concerning privacy violation, because you just might read your password to your friend on the phone, and then your Google Nest is right there hearing you, and then maybe that's forever saved on a Google server as a voice somewhere, and 5 years later it could be used or something, but because it can pick up things like that. But nevertheless, it's interesting that seniors are said to really like Amazon Echo and Google Nest. And then I'll also mention for seniors as well, just an iPad. So that sounds so basic, but if I had a senior relative who wound up in the hospital, the first thing I would do is bring them an iPad. And I know of a family where there's an elderly couple, and they have one PC in the household and no iPad. And so just the iPad, because it's this different form factor and it's a delight to use in some ways, and it's so easy to press an app on the screen, and so fast and with lower latency, etc. So those are just some technologies that I think have improved my life, or I think would improve the lives of some seniors that you know. Barbara, any thoughts on that, or any ideas you have of technology that would improve your life?
Yeah, I went ahead and queried my team to find out what technologies they really like, and a bunch of things came up. Financial fraud protection was one. Everybody is using ChatGPT. Like we used to say, we're using the internet, right? Everybody's using that. So that was pretty clear. But I think the winner from our team is Fathom, which is what we use to record case team meetings, where we're going through copious amounts of data and coming up with really creative ideas. And it's very nice to have that summarized in a logical way. So that's been a big tool for us. There's a book called The Digital Mindset by Professor Neely at Harvard Business School, where she queries folks, and I've been doing it at keynotes and other presentations around on the scale of Gen AI, like where you are personally, whether you're a skeptic or a dabbler, an explorer, or a cyborg. And so the trends on that, the data that we've been gathering on that, have had a lot more explorers. Like there does seem to be a big uptake just in general of Gen AI tools. Still, cyborgs are kind of the second smallest segment, but exciting that people are looking to explore and find ways to optimize Gen AI.
Yeah, my favorite stories about Gen AI is first, obviously, students are using Gen AI. And so I saw students using a tool where a professor throws a math problem on the screen where it's written using mathematical symbols and language, like the integral,
Translator.
the integral. And the student takes a picture, and instantly it solves the math problem. So that means it had to interpret the math symbology in order to solve it. So students using Gen AI tools, sometimes inappropriately, and then, of course, professors catching them by using Gen AI tools to catch plagiarism or use of Gen AI. And then also there's an arms race going on right now, which is hospitals are using Gen AI to bill more completely and possibly overbill, and then payers are using Gen AI to block this. So you've got this, they're both spending money that perhaps could be better spent on this. And then there's a joke about that, which is that in the Arnold Schwarzenegger movie, The Terminator, the Air Force builds a supercomputer, and unhappily the supercomputer becomes conscious and wakes up, and then it decides it's going to destroy humanity. And so the joke is that the movie was directionally correct, but it's actually not going to be an Air Force supercomputer. It's actually going to be a hospital billing AI that wakes up and decides to destroy humanity. So we have a couple remarks here. One is Aman says that he's looking to build software for scheduling health employees. So that is both a great opportunity, but it may be one that is currently well served. So you have to figure out what is your special opportunity here? But there's two things. First, healthcare does enormous amounts of scheduling of patients, but healthcare also has a very unusual workforce where you have these people who have licenses who can practice, and people without licenses can't practice. And so you have to persuade people with licenses. Big provider organizations have big plants, they have big buildings, and they only make money if they get people with licenses in the building, and then they get patients to them. And with COVID, many of the nurses and allied professionals became very unhappy with their job situation. So they're always looking to optimize better, either better pay or better work conditions or more flexible hours or something like that. And so the big providers can't get the people in the rooms. They can't get the providers in the rooms, and then the providers themselves are unhappy with their current work situation and looking to move. And so finding someone you can do that scheduling, but also matching and also recruiting, solving that whole puzzle is a big deal. So Barbara, any thoughts on Aman?
Yeah, I actually think that's a great opportunity to do something very unique and different, because a lot of the staffing, believe it or not, and especially temporary staffing when you're kind of having to fill for someone out on maternity leave or things like that, a lot of that is not really very tech enabled right now. There are a couple of companies who do this in a very tech enabled way, but you could imagine kind of an Uber approach to scheduling would be much more effective. Even within that big health system, that flexibility ends up being really valued by both your full-time employees and the folks you need to bring in temporarily. And I do think that's all an area ripe for consolidations, very locally driven, these staffing companies. Yeah, I think it's an interesting,
That's great. And so now moving on to our next section is upcoming conferences. And so here we look at conferences that are coming up and give our own opinions on them. And for our audience, if you have any questions about conferences that are coming up, feel free to throw it in the chat as well. So coming up, the first I would call out is Device Talks Boston. That's coming up at the end of the month, April 30th to May 1st. And this is a conference where you could expect to find medtech VCs. It's a regional conference, so you could expect to find New York and Boston medtech VCs there. And so if I were a young company leader, I would try to get a speaking slot at this conference. There's lots of speaking slots at this conference. It may not be filled up yet. Number one, I'd look for a speaking slot. Number two, I might get a booth. I'm not sure. And then number three, I would identify every VC who's at all affiliated with this year's conference or last year's conference, and every other medtech VC that you know in Boston of in Boston and New York. And I would write all of them, and I would say, let's meet at Device Talks Boston. And that could lead to a meeting there, and also they could attend your talk. They could come to your booth, or they could say, I'm in New York, I'm not going, but let's do a call anyway. But people who go to these, when investors go to conferences, they're often in meeting mode, looking to do 8+ meetings a day. And so that takes work. And so if you do the work for them by suggesting that you meet there, you have a better chance of getting the meeting than if you cold call them to do an hour-long call on Zoom or something. So that's a Device Talks Boston. And then my favorite investor conference is coming up, the Digital Healthcare Investor Summit in Boston, May 19th to 20th. And this is the premier independent investor conference in digital health and the premier conference on the investor conference in digital health on the East Coast. So it's independent in the sense that everyone knows of the JP Morgan Healthcare Investor Conference, but that is put on by the banking department of JP Morgan Investment Bank. So it's owned by a broker dealer. This is an independent conference, and so many of the top East Coast digital health investors will be there. So likewise, I like this conference. I like going to this conference. And if you're on the East Coast, you can go to this conference. You can look up investors who are in Boston and New York or other cities who are affiliated with the conference this year and last year, digital health investors in general, and all Boston digital health investors, and you can write to them and say, let's meet. And it's also just a chance to meet with investors who are not going to the conference, who are in Boston if you're not based in Boston. Now I've actually had an experience, it's my favorite conference, but I've had an experience that their programming is so good that investors will tell you, I'm not doing meetings, in the middle of the day. because I don't want to miss the programming at this conference. And so you can try to turn that. So that might mean that you stay an extra day or come a day early for the conference. And so those are two upcoming conferences. Any thoughts on those two, Barbara?
No, both are great. Device Talks, where FSI is hosting a reception with Goodwin on the 29th. So if folks are coming up early and would like an invitation, I don't have an unlimited number, but I have some that I can let folks have. So please reach out because happy to do that. And the Digital Health Innovation Summit is a great one as well. Some of the content could be helpful. So not only the investor meetings, but also potentially enjoying the content.
Great, thanks. And then intriguingly, there's a new conference on longevity in Boston. So it turns out Boston is a major center of longevity, especially from the longevity biotech perspective. There's a new it's primarily an academic conference called the Aging Code Summit, exploring longevity with AI. That's interesting because they have intentionally added a software data AI angle to what is otherwise a biology and an academic biology conference. So this will be the first year. I know the organizers, and it's affiliated with Longevity Global, which is a nonprofit a membership-based nonprofit that does events around longevity. And so I like it enough to endorse it, and I'll be there. And they have they're doing a pitch fest on one of the days. So that sounds like, you can look into this conference and possibly get a slot pitching at this conference. So Barbara, any thoughts on that or any conferences that you want to recommend to our audience of innovators that are coming up?
Yeah, the only one I want to point out is a long way away in January, but my understanding is the Consumer Electronics Show has a digital health section, and I haven't attended it yet, but I've heard phenomenal things about it, and I'm hoping to attend it next January. So just put it on your radar screen. It's I believe the week before JP Morgan, but I've heard really good things about getting connected directly with investors and having a big investor turnout. So keep that one on the radar.
Yeah, I'll second that, which is that the Consumer Electronics Show is a trade show. So the primary thing that's happening there is that major buyers and sellers are getting together, and the buyers will buy from the sellers, and then they'll retail it out to retailers during the coming year. But this is one of those trade shows that many VCs go to, and it does have a very good digital health track at it. It tends to be focused on the consumer side. So does your company have a consumer angle at this? You would find both consumer tech investors and also digital health investors who like consumer. So consumer and digital health is companies like Noom or Peloton or Whoop or
Headspace, yeah.
Fitbit and that sort of thing. So the next part of our show is just personal notices. And so for our audience, the next show will be on April 23rd. It's on innovators moving to tech-enabled services in healthcare with James Houston of Primetime Partners. And then for our Boston audience, our next Boston Health Innovation Night will be Thursday, April 7th, 5:30. In downtown Boston. Our guest of honor is Janak Joshi, who is the Chief Digital Officer of the state of Massachusetts. If you're wondering what is a Chief Digital Officer, you have a chance to ask that. And his topic is building a world-class healthcare AI in Massachusetts for the evening. And to register for these events, you can go to stephenwardell.eventbrite.com. That's my Eventbrite page. And Barbara, any personal notices for you?
Just to, if folks do want an invite to that Device Talks reception, let me know, because that's coming up around the corner. We'd love to have you.
Great. So now we're actually moving on to the second half of our show and the main topic of the day, which is where are digital health and AI creating value in healthcare today? And so Ken asks, will these new conferences be listed here? Yes, I'll take the ones that I mentioned and I'll copy them into the chat, into the LinkedIn chat. And so Barbara, your firm publishes a regular health market intelligence report. Can you tell us in general, what do you cover in that? And you make this available to the public so our audience can go to your website or your LinkedIn page to find the latest report and prior quarters reports. Can you tell us what you cover about this in general? And then can you tell us about your findings related to our topic in particular?
Absolutely. So we put this out every 6 months. It covers all of digital health in a way that's pretty straightforward. So you'll be able to follow through, by segment. Each segment is defined, lists out overall trends, and then it will give you trends by segment as well. So we cover the IPO, the M&A, and the VC investment. We cover what each segment is doing in terms of growth and also public companies. And within that, you'll see the VC firms that are doing the investment and a lot of the major players. So it really is a helpful resource. And again, download it, use it. There's a lot of great information in there. And maybe to start with this conversation, let's do some of the kind of overall trends in digital health, and then we can maybe dive into the subsegments. So when you think about venture capital investment in digital health, it's a big number. It's 12.7 billion in 2024, 416 deals. So the issue there is that we had those peaks in the pandemic, right? So I like to look at the CAGR from the compound annual growth rate from 2018 to 2024 to give us more of a sense of how is this growing, because we can all kind of agree that the anomaly of those pandemic years threw that off, particularly in terms of pricing for some of these companies. But if you look at the CAGR, it's 8.6%. So there's been growth in venture capital investing. It's not massive growth, but there has been growth in what's been invested in. Pre-money valuations, especially let's look at the Series C pre-money valuations. They were at 190 in 2024. And again, if you look from 2018 to 2024 at that compound annual growth rate, that's like a 15% growth rate. Is it still too high? Investors will tell us that by basically whether they're making the M&A deals happen or not. But that Series C has come down off of its peak, maybe by half. Its peak was about double the 194. So we see things that are like helpful. We with prices coming down, there should be more activity, and that would be a really exciting thing. IPOs have been low in digital health. We've had 3 since 2022, Waystar being, by far the biggest. Barely cracked the IPO window in biopharma and in life science tools. Not much there happening either. M&A in digital health, we had 15 deals in 2024, and that is the second smallest size since 2018. So M&A is definitely not giving us a great opportunity for exit. CareBridge, which was one of those companies that was multi-payer investment that Elevance purchased, value-based care product. Edwards purchased Endotronics, which is a heart failure management system, $650 million. Those were great deals. This is an interesting one around consolidation because Transcarent recently acquired Accolade. Accolade is a personalized, tech-enabled navigation for patient navigation tool. So Transcarent acquired them for about $620 million. Transcarent last year raised $126 million. And here's a perfect example. They're kind of in a similar space. And Steve, you were talking about this earlier. When is this going to happen? Well, here we have one example just in the first quarter. So kind of exciting there. M&A and biotech also muted. Life science tools muted, and medtech strategics are looking, but they're waiting for proof. And that's kind of been a bit of a kind of unfortunate trend, but M&A is happening, but more muted than we'd like. Public companies for digital health haven't performed all that well. 2 have been very good. Phreesia has done well. Guardant Health has done well. But the remainder have seen a 66 median share price decline. So I think 5 of 20 are performing above their IPO price. So public companies have not, been having outstanding performance. And I think all of this tells us that if you're not getting a great exit, the money that's flowing into early stage is just a little bit smaller than expected. And so it's just tighter to raise capital, just reconfirming. Doesn't mean people aren't investing, because they are. And they're investing, especially when there's an ROI. They're investing in AI still in a big way, massive AI investment. Actually, we can talk about some of those details. And if you can reduce provider burnout, that's also a major theme that is helpful. So those are some kind of overall trends.
That's great. Yeah. So the biggest questions I get asked is, when will the fundraising environment get better, and when will the consolidation environment get better? And I think a lot of people are looking at that Transcarent deal of buying Accolade for a number of reasons. So first of all, that sector, I call that sector the employer health tech sector. So that is software and tech companies that sell software and tech products and services into employers, usually the benefit leader, who is buying health benefits for employees, programmatic health benefits for employees. Investors and company leaders have loved this sector for like 15 years, and there's been over entry into the sector, unfortunately. And there's been incredible innovation in the sector, but it has matured of late. So 10 years ago, no one knew what a diabetes product for employers would look like and whether it could do anything. And today there's multiple products that are very competitive with each other. The market's matured. Employers know what they want to buy, and they know what they want to pay for it. They know what kind of results to expect from that. And so with that maturity, employers now want to buy suites and platforms instead of just buying point solutions. And this is a major impetus to have a consolidation wave in this area. So you'll have a small number of companies will be able to say, I can be the consolidator in this sector. So Teladoc is an example of one. They need to get their stock price up in order to do some more consolidations. Transparent Accolade is now another. There's several others, though. The Castlight is still around under a different name. Personify Health, which is Virgin Pulse and HealthComp, had a merger several quarters ago. And these are companies, if they can get backing, financial backing, they can lead consolidation waves, and then they can present employers with a consolidated suite, and they can win the product match off because products are not being bought on an individual product basis based on feature functionality. They're being bought on a suite basis increasingly. This is good news for the consolidators or companies that can turn themselves into platform companies and become consolidators. And it's bad news for the point solution companies. Interesting about the Accolade deal, I talked to some people who were close to it, was that a lot of private companies in their last valuation round 3 years ago, they got a very high valuation. So they might have got a valuation of over 10 times revenue, maybe even over 15 times revenue if they were growing top line. And now they're facing much lower multiples. And some are ready to acknowledge that, and others are still hoping and holding out for something better. And so the current SaaS capital index is that publicly traded SaaS companies, which are usually they're growing more than the S&P 500, but they're large and they're not growth companies. They are trading at about 7 times annualized run rate on SaaS. That's down compared to historic averages for that sector. And if you can get your top line growth rate up, you can trade for significantly more than that. But young companies, just compared to their prior high valuation, they're not willing to take a low valuation. And you can actually have disagreements between management and board. So management might say, we have to win in the product market, and so we have to take whatever our next valuation is. And board might say, this loss is not realized yet, and I look really good in my numbers today at my firm. But if we take another round at a down round, I'm going to look terrible in my numbers with my investment track record. So you get disagreements that make it hard, and then consolidators come in and make a lowball offer in today's environment, but they're not willing to do work. They're not willing to fight. They're not willing to try to reconcile parties if the young company itself can't agree. So that's some of the issues. And so what was special about Accolade was a couple things. First of all, it was a public company, and so that meant that it's valued every day, and it had absorbed that the stock price was down, and the investors and board of Accolade all agreed that it's down, and we have not been able to get it up. Mm-hmm. And then another thing I heard was that as a public company, obviously it had years of audited statements, and that made an acquisition easy. But there are cases where a consolidator comes in and talks to a young company, and just that there is a disagreement about the books. It might be that the company was booking revenue somewhat favorably, and then the consolidator says, I'm not willing to accept this. And so, but that deal, so people believe many of these deals will happen, but that deal happened in part because Accolade was a public company, and everyone agreed what it was worth, and everyone agreed what their numbers were because of the public audited statements.
Right.
And that's not the case with a lot of private companies, to the extent that consolidators are on the prowl. They will often make a lowball offer, and then the target company doesn't respond quickly. But
I think
that's
So you made
structure.
a couple of really interesting points, and I want to talk about that. The whole idea of a platform, certainly better for employees to have a platform to choose from. Same thing for health systems. So some of this consolidation on AI tools, for example, in imaging, you're buying, several different point solutions. It would be much better if there was one situation, you were buying them all and they all came in kind of together. So I think that the concept of consolidation is going to help the buyer. It's going to help adoption. While they may lowball, others may say, it's a down round, they're being lowballed, but in fact, maybe that is just what the price is these days. It's been quite a while since we've been at that peak. So it does feel like some people should be adjusting down a bit. But in fact, if they get the consolidation and they increase adoption, then overall it could very much be a win. You also get to kind of get the economies of scale of a sales force that can sell so much more. Like there are some very good aspects of consolidation.
That's great. And and this sector, employer health tech, is viewed as very well positioned for consolidation. And we've seen Transcarent make an acquisition in this sector. Other sectors, there's provider tech, which is software and tech companies selling into provider organizations, which usually means hospitals and medical practices. And here, on the one hand, there's also buyers have become more mature, know what they want to pay for it, want to buy suites. That's also true in provider tech. But there's sort of an overhang and unresolved uncertainty in the sector, which is what's going to happen with Epic and Cerner. So Epic and Cerner, in many of the subsectors of this area, have the capability to dominate or to sort of wreck competitors or companies that have to cooperate with them. And so that there's consolidators are kind of leery of funding a buildup in an area that Epic or Cerner could get into. But it's a big area, and Epic and Cerner are not in all the parts of the areas. Being able to tell a story about how you consolidate and win in provider tech and are not subject to one of the big incumbents sort of wrecking your plan.
Right.
That sector is consolidating. And then there's pharma tech as well, which is software and tech companies selling into pharma. So that's like clinical trial automation software or pharma-specific CRM software, or more recently, there's AI for drug discovery in that sector. And that's actually going through entry right now, not consolidation. So pharma is relatively spendy, except for the RFK pause right now, but pharma is relatively spendy, and there's more entry into that sector as opposed to maturation and consolidation in that sector. So that's just an overview.
Absolutely. Yeah, let's walk through the sectors in detail. There have been some very interesting things happening recently in AI drug discovery. So we'll walk through that, but let's just go through each sector to some extent. Healthcare IT, you mentioned Epic and Cerner, they certainly would be in the healthcare IT segment. They had about 1.9 billion invested last year, 94 deals from venture capital. Ambient clinical documentation, we've talked about that being quite a ways around. Pretty much all of the early investments in this quarter have been in this segment. Innovaccer, Abridge, Truveta, like a number of them. So, and overall from 2018, about 4% growth. So you'd say exactly as you were saying, kind of proven out. There's already a lot that's happened there, some innovation there, but not at the beginning stages, more mature. Telehealth, 2.4 billion, 80 deals in 2024. They've had about a 9% CAGR since 2018. Transcarent is the big one in that, but there are a bunch of others like MSK, nutrition counseling. There's a whole bunch of others in the telehealth space. Wearables, smaller segment, 0.9 billion in 2024. Overall, it's pretty flat since 2018, even with all that's gone on in wearables. Gluco raised 100 million, connected care for diabetes and other chronic conditions. Lots of action in cardiac monitoring really recently. Vital Connect, they raised 100 million on the ambulatory cardiac monitoring side. Direct to consumer is interesting. By definition, does not require physician involvement, right? But in fact, our research shows that patients ask their doctors for what they should be using, and doctors are kind of then expected to be incorporating that information. That was a $2 billion market in 2024, had about a 7% CAGR from 2018. Some interesting things in there. Pelago, the virtual clinic for addiction treatment, they raised 58 million. FoodSmart, telenutrition platform, raised 200 million. Some of the states have food as medicine programs through Medicare that are reimbursed. But the direct-to-consumer part is interesting because there are a bunch of behavioral health apps as well that, like, a psychiatrist will ask their patients to download before they leave the office to kind of make sure they're safe in between visits. So there is this kind of mutual benefit of some of these direct-to-consumer pieces, helping both the provider and the patient. Diagnostics and clinical decision support, 25% CAGR since 2018. Still a growing, not a mature segment, a lot happening in there. Clearly is an AI-driven CCTA company. Cytovale uses, that's very cool, uses AI to kind of they have an early sepsis detector. I think it takes 8 minutes. It's called IntelliSep, and it's really effective. When we think about drug discovery, clinical trials, and commercialization, just huge stuff happening in drug discovery. So Zero was a deal last year, $1 billion Series A. David Baker, who's involved, won a Nobel Prize. Like it's a pretty impressive group of folks involved there, and it's AI on top of kind of data generation therapeutics, exactly what you think drug discovery will be. And very recently, Google's part of a $600 million investment in isomorphic labs, which is also drug discovery. Novartis and Lilly are involved. So when you just said, like, what's happening in AI drug discovery, it's just absolutely exciting and phenomenal. You know, we'll see growth, and hopefully soon we'll see actual results that have come out of that. There was a phase 2 trial from in silico, which did have a positive result based on some AI generated and designed drugs. So really exciting things that could happen there. Clinical trials, site selection, recruitment, all of that. Again, 20% CAGR, so a lot happening there. Formation Bio raised $372 million. They're streamlining drugs that are like ready to go into clinical trial and just basically making that clinical trial more effective. AI for commercialization of therapeutics is also really interesting. Very hard to get an overall read on how that market is going because there's so much internal investment with it within pharma companies. But there are a bunch of very interesting companies that are either managing the kind of the marketing materials, whether there's regulatory issues with them, or reducing time from approval to market penetration. So lots of investment throughout those segments. Any kind of interest there in, Stephen, any particular one, or are you just hit the nail on the head on the AI and drug discovery being just a huge growth area?
Well, so first for our audience, I thought you and I could try to explain. So my understanding of what AI for drug discovery is the following. It is that in recent years, pharma has been able to model, computer scientists have been able to model the shape and active sites of drug targets and drugs better than ever before. So we've all seen these models, and we might not have realized they were flawed and imperfect, and they did not predict reality well. But they've recently been able to figure out exact issues around protein folding, for example, and other ways to model these better. And of course, usually what drugs do is they either promote something or they inhibit something. And they do that usually through an active site that binds with what's in the body already. So they might inhibit pain by binding to something. They might promote, a growth by acting like a growth agent and a new growth agent in the body. And all of this is done by the shape of proteins and the active sites on proteins and what they do. And someone might have a defective process in their body, and they're supplied with effective proteins that replace and do the needed job in their body. And then you also have, there's other factors as well, such as, is this toxic in some way, or is it soluble in blood? You could have the perfect drug, but it's not soluble in blood. That's a big problem. And in the past, the gold standard for these was first test in glass, in vitro, second test in animal models, and third test in people. But there's a new strategy coming along, which is in silico testing. And we've seen waves in the past where they took the in vitro model to extremes, where they would try to test 100,000 or 1 million drug candidates against a drug target. And these had mixed track records, that we did not discover 1,000 amazing new drugs through these. So there was a mixed track record behind these in silico attempts. But now there's an attempt to do this again I'm sorry, there was mixed track record behind the in vitro, the in glass efforts. Now we're trying to do this again in silico, which means that we have these more accurate models than ever before. And so again, you could have a known drug target, and you can try many drug candidates against it in silico. And we believe the fidelity of translating this over next to in glass and then to animals and then humans will carry over better than 5 years ago or 10 years ago. And this is not generative AI. This is sort of computer modeling AI. And so the companies are making various bets. Proprietary systems are being built up. There's to understand drug targets in the body and to understand drugs. And pharma companies have large IP libraries of drugs that they know do something, but they don't know, but they haven't spent $100 million on them yet to figure out whether they work as a drug. And so this is where I think the boom is when people say AI for drug discovery, which is a very hot area right now. New companies being formed, pharma tech investors investing in it. It's one of the bright spots, I believe, of the last, call it 6+ months. Is that describe the sector well?
I think that's a great explanation. I think an easy way to think about it is that essentially when you are running into a clinical trial with a molecule, you're not entirely sure what you're going to find, right? So I've heard scientists say, I'm kind of throwing spaghetti at the wall. And what these models allow you to do is have a lot more precision about what your endpoints should be and how it likely is going to behave. Much more precise and very exciting because the AI on top of this can go through many different iterations in easy, no time at all. I mean, it takes some processing bandwidth, but it can actually do these iterations and kind of do this modeling in a much more advanced way than we've seen even in the last 2 years. I mean, it's pretty impressive.
And I heard a wry comment, I guess I'll call it, coming out of JP Morgan, which was that pharma corporate development officers were surprised because usually young biotechs are trying to figure out some partnership or other with big pharma, and then they get a payment, a $20 million payment in, and then that's non-dilutive financing for them. And so they're trying to be impressive and make sense and find a way to partner with big pharma. And big pharma has more cash than innovation, and so they're looking to make bets on young biotech. So that's chocolate and peanut butter, two great tastes that taste great together. But the wry comment was from a pharma corporate development executive was that every single young biotech at JP Morgan felt it necessary to say in their PowerPoint that they have a proprietary AI drug discovery platform.
Algorithm, yeah.
Also that this was somewhat of a mismatch because pharma doesn't quite know what it wants to do in this area, but what they do, they want to be their own and proprietary. And so it was a bit of a mismatch to say to pharma, partner with us. Pharma might buy you or they might build their own proprietary, but they don't want to partner with you and fund you for you to build something that might outshine what they do internally. So that was but it was noteworthy also because that was one of the big stories of JP Morgan in January was pharma AI for drug discovery. Well, so by the way, stepping back, what do you think are some of the favorite areas where investors have invested in AI in healthcare? Last quarter, last 6 months, we just mentioned pharma drug discovery, but are there other areas? And we also mentioned
patient navigation,
ambient scripting powered by AI, speech recognition. And that's not just being adopted by hospitals, but it's also a favorite with investors right now, along with billing and coding in that area. And then pharma AI drug discovery. But are there other categories that investors are investing in either because they're working right now, they're helping healthcare right now, or because investors are betting that this is an obvious area that it will help healthcare?
Yeah, value-based care is an area of investment in anything that can manage chronic disease more effectively. So, and that can involve like direct-to-patient pieces, and it can involve kind of virtual triage. There are a number of ways that can happen, but those are big areas of investment. And not as, I feel like the ambient AI piece where there are a number of great players Abridge and a whole bunch of others. I'm not sure there's as much of a clear winner on how you manage the value-based care piece and how you manage chronic disease. Some folks are doing it for hypertension. Diabetes is a big win. These are places where there are serious pain points in our health system, and we are limited in terms of how many providers we can produce in a year, and patients need care. So it really does seem to lend itself perfectly to digital health solutions. So I think both of those areas. The other area where I feel you're seeing a lot of investment in AI. I mean, if you're selling a system to an enterprise that's around, finance or supply chain or any of those AI tools, those are easy adoption, easy to compare. People are adopting those. If you can do anything around workflow, Steve, that's also been an area that's been very helpful. If you can alleviate, like the clinical documentation does, if you can alleviate workflow issues for providers, that will still continue to get good investment.
That's great. So, and let me add to that. So, interestingly, with chronic care management, there's been this great promise in chronic care management of mobile devices, and I think it's a promise that has led to improvement, but not the large-scale improvement that we'd hoped for. So with chronic care management, and a good example of this, by the way, is Livongo, which had a hit product and also had a bit of a stumble as well. But they took your blood glucometer and they made it Bluetooth connected and easy to use. And that data goes into your Livongo app. And then your Livongo app has an AI coach and a human coach. You actually got the time of a human coach to talk to you about this. And then it would translate results. You could input your step count results into it, your weight, your blood pressure. You could even input your food and calories into it. And then it would give you results that very smart, assiduous people would have calculated for themselves, but which this really made it accessible to so many more people to have a Livongo app. And it could say things like, don't have dessert, or it could say like, this would be a great time to go for a walk or something like that, and coach you. And they are always on, always within arm's reach, always up to date. They're personalizable, they're gamifiable, they're social in that you reach your friends on them, that sort of thing. But I think AI, modern generative AI, and with those advantages, so one of the hardest parts about chronic care management is that probably 50% of it is patient behavior change. And this is one of the hardest things imaginable. When Noom seems to have figured out a certain amount of patient behavior change, and everyone's wild about Noom because they actually did it. And there's 1,000 apps on the Apple App Store that say they help you lose weight and don't. But it's hard to achieve patient behavior change. Whenever you actually achieve it, it's big news to achieve it. And it's believed that the smartphone has enormous capacity to achieve patient behavior change for the reasons I just mentioned. But AI, I think, has the possibility in chronic care to take that to a next level. It can do the smart things that I mentioned, the smart coaching, but it may be able to do it in a conversational tone with you instead of having or it may be smarter, the kinds of, so Livongo, I was the first analyst to cover Livongo on Wall Street when they went public, and they called their internal AI program, for some reason they called it AI coach. So two AIs. They wanted to get the message across. They put AI in there twice to refer to their internal AI program and their coach. But that was pre-LLM, and so I hope that this can be reinvented and be better, and somehow you have a positive relationship with your chronic care management coach on your phone, who is modern AI and has more data and can solve more of the problem for you and make it easier for you. So that's a really intriguing area there. And
it is. And I think that Hippocratic investment kind of talks to that, right? Because that's the LLM that can be actively chatting with you, can be an active voice with you. So it is a coach that is, an AI coach, which might get us to that patient change that's really hard to get to. Like it's not an easy thing to fix even for Noom. So I think there is opportunity there. And of course, GLP-1s kind of bypass a lot of that, but in fact, it could be a game changer, having these kind of, these AI tools that really are your interactive coach.
There's a longstanding joke that America's drug problem is that Americans take drugs they shouldn't take. But America's other drug problem is that Americans don't take drugs that they should take. And so that's the adherence problem, which is, if it were solved, it would double the revenue of pharma, which is astonishing. Presumably, people would be less sick, more well, also. And that could be unlocked by AI as well. So once again, adherence, taking the drugs you should take, that's a behavior change issue, and people are lousy at it. And there have been hundreds of attempts to solve this, and they've often made a small impact, but not a really big impact. And the problem is still out there to be solved by someone. And so perhaps some combination of handheld devices, or the new form factors, whatever that new form factor is, plus AI could help us. So two intriguing form factors. One is, we've seen these ones that are sort of like the Star Trek badge, the astrological area, the Star Trek badge. Maybe it fits in your pocket, like in the movie Her, or it's lighter and smaller in the Star Trek badge, but you're talking to your AI all day long, and it doesn't necessarily have the screen and keyboard interface that we're so used to. That's one. And another one I've seen, it's been around a while, but it's used primarily for very expensive patients, but it's like a tower by your kitchen sink that dispenses pills, like those change machines in the cash register that we used to have a long time ago, that dropped out, your coin change or whatever. So those are some other possibilities. Now, we have a couple questions from our audience. One is, Bruno asks, payers often, and by the way, for our audience, we only have a few minutes left, and so now's the time to ask any questions for Barbara and me in the chat. So Bruno asks, payers often fall outside of these discussions. Any interesting digital solutions shaping strategic priorities for payers? Barbara, any thoughts on that?
By falling outside the discussion, I think there are a bunch of interesting solutions for payers. And you talked a little bit about those that kind of make sure coding is correct and things like that. I think when you look at where payers are multi-investing, 20% of it is like administrative AI pieces, 40% is value-based care, and a lot of home health solutions in that. And that's kind of an area where there also could be significant improvements. And so that's kind of a newer area. So I think payers are, Optum's the most active in digital health. They've made 7 acquisitions since 2018, 96 investments. 91% of what Optum does is investments in digital health. Of the investments they make, Kaiser's second. They're a payer provider. The kind of the 40% chronic care management, 40% value-based care, which is also around kind of home health, which is a big trend. I think you've probably discussed previously on this podcast, and about 20% in administrative AI.
Yeah, thank you. And Bruno, I'll throw in, payers can expect that providers are going to attempt to kind of fully bill or overbill. And that's a legitimate area for payers to push back on. So there's so many vendors promising to providers they're going to really bill more. And so payers can expect to see this and need to sort of catch them in any overstatements or inaccuracies. So there's going to need to be a payer side to that coin. And then also, payer plan managers are very motivated by the government quality ratings that they receive. There's a couple that they receive, and these change and get more strict over time. And this literally is the worst moment of the year for the payer plan manager when they find this. And so they may say, we need to boost preventive care visits from our members in order to rank higher in quality ratings. And then they often they don't have the people. They do have budget. They don't have the people or the expertise to do that as a plan. And so they're looking for the vendor who's addressing these pain points. So I would try to survey these plan managers about how are they being hit on their quality ratings, and then what does that translate into in terms of vendors able to help the plan manager. And sometimes that comes down again to behavior change. So you have a vendor who promises they're very good at behavior change, reaching out to patients, getting them to get preventive care or adopt other behaviors that in turn gets measured and then boosts the quality rating of the plan and gets them a higher reimbursement. So that's another area.
A number of AI tools that do this: Metacody, NIM, Codametrics. I mean, there are a number. Cloudmedics. There are a number. And honestly, wouldn't the best solution, Steve, be to have one system that's making that decision so we weren't wasting so much time and money on the coding and then the denials and then the management. It's billions of dollars wasted on all of that.
And then we have another question from Brad who asks, can you mention a couple of the names of working AI solutions in billing and coding? So, yeah, a Bridge is a leader there, and Codometrics, which is a spin out of I think MGH in Boston, is
MGB, yep.
Leader there. And any other?
Gale AI, Cloud MedX is another one, Medicodio, and NYM Health. Those are a number of them.
And I think I've heard Fathom and Maverick also in that.
Fathom I've heard. I haven't heard Maverick, yeah.
Yeah, so and that's an area where there's been a real breakthrough in the sense that the way that coding works is that a doctor takes clinical notes, but the doctor doesn't record all the information for billing and coding because they're not trained in billing and coding, and it would be and they are already trying to cut the time they're spending on this in the first place. So the record then goes to the internal coding department, who then attempts to complete more of the billing, and then they may go back to the doctor with questions, and then when those questions are answered, they then bill to the payer. And with modern AI systems, they've been able to dramatically boost the number of these that go what's called direct to bill. So they never go to a human coder. The doctor speaks into an ambient system or makes notes in an EMR, and then this can go direct to bill and doesn't have to go to a medical coder. And you can imagine how frustrating the old system is. On top of that, since COVID, older human medical coders have been retiring, and young people don't want to go into this as a career, and they may never have to go into this as a career. And so hospitals have been scrambling and leaving money on the table, not billing things because they never complete them or never submit them, or because they have incomplete forms that are under billing. And so that's an area that's really been on fire and has a very measurable ROI. So, and Tim in the chat says REST technologies have integrated AI in billing for remote digital health services for multimodal sleep monitoring, apnea, CGM, etc. So thanks, Tim. Well, good. Well, so we've reached the end of our time. And so, Barbara, any final thoughts on just your reflections on what's working in the product marketplace, what VCs like, and how the quarter went the last quarter?
I mean, just final thoughts are, keep at it, because if you're removing burdens from workforce, if you're adding efficiencies, if you're improving outcomes, it's still an area of investment, and VCs are still investing. We are just waiting for that IPO window to crack. But if you continue to fight the good fight, when it does crack, you'll be there.
Yeah, and I'll mention as well that a lot of our innovators are in the field of technology and software and data, and there have been many remarks that this career is suffering a setback in the B2B world because of AI arising and devaluing the work of software programmers or whatever. And so I think that healthcare will be a relatively prosperous and protected sector for innovators in the future for a number of reasons. One is that there is no limit to what people will spend on their health. In America, we spend 20% of our economy we're the richest country. We spend 20% of our economy on healthcare. I think as other countries become richer, they will spend more, not less, on their healthcare, and they should spend more and not less on their healthcare. And there's no limit to what we will spend ultimately on our health. And then also the lack of professionals in healthcare services is a massive global crisis. America's lucky because someone can get trained in nursing in the Philippines and move here and have a career here, but then the Philippines doesn't have enough nurses for itself. So all over the world, there are not enough professionals in healthcare. There's a massive labor gap at every single level in healthcare. If we created a Manhattan Project today to get more young people as professionals into healthcare, it still wouldn't fill the gap, and we're not creating a Manhattan Project. And even if we did, it wouldn't have an effect for 20 years. And so just what is going to fill this massive skilled labor gap in healthcare? And the answer is software is going to fill this gap. AI is going to fill this gap in healthcare. It's things that have not yet been invented, but that have a massive demographic trend behind them. So healthcare can be a place to weather the storm for the tech innovator. Well, Barbara, thank you so much for coming on the show.
Thank you so much for having me.
And you've been listening to Digital Health Investor Talk with host Stephen Wardell. And we're publishing this show as an episode of the Digital Health Investor Talk show podcast. Subscribe on Apple and Spotify. Don't forget to rate us. And for our Boston audience, I'll see you on Thursday, April 17th at the Liberty Hotel for our Innovation Night featuring the Chief Digital Officer of the state of Massachusetts. So thank you so much and see you next time. Bye-bye.